In the financial world, when unexpected document releases create market uncertainty, it signals something deeper than a headline. That's exactly where we are right now with the congressional move toward impeachment, following the unprecedented leak of bank records. From an investor's perspective, this is less about partisan politics and far more about institutional stability. What we're witnessing now truly matters to every single American, whether you follow the intricacies of Washington closely or not. Structural instability doesn't always commence with chaos. Sometimes it begins with quiet, concerning patterns we overlook for too long. If you find this analysis valuable, please take a moment to like this video and subscribe to the channel for more insights on how political developments impact our financial future. Based on nearly a century of observing numerous political crises and their effects on market confidence, I can share a crucial truth. Markets react more strongly to unpredictability than to any specific political outcome. The market's primary lesson is that all viable systems demand clear rules and their consistent application. My immediate concern is not with short-term market fluctuations. My true focus lies with the longer-term implications for governance stability. The congressional announcement regarding impeachment proceedings, based on these newly leaked bank records, represents a significant escalation in our political environment. The House committee has clearly indicated these financial documents reveal previously undisclosed transactions they deem highly relevant to their investigation. Unlike previous efforts, this one arrives with specific financial documentation purportedly showing a pattern of concerning transactions. In governance, just as in business, documentation changes the nature of allegations. In corporate terms, this is the functional equivalent of an audit committee finding unusual financial patterns that trigger a mandatory, broader investigation. This elevates the situation from mere political rhetoric to a serious evidential inquiry. The stakes extend beyond mere partisan politics to fundamental questions about financial transparency and public service. What transpired over the past Bay-Muy-High hours is particularly telling. The conversation in Washington has shifted decisively from generalized accusations to specific financial transactions. New documents reportedly reveal a series of international banking transfers that congressional investigators find troubling. From a professional risk management perspective, the deepest concern lies in the convergence of financial scrutiny with the political process. In corporate business terms, this mirrors a company facing both an SEC investigation and significant shareholder litigation simultaneously. You simply do not experience that level of multi-system pressure unless fundamental governance questions have emerged. The historical precedent demands examination. Financial disclosures have always played central roles in past political crises, from Watergate's campaign finance issues to recent controversies. However, this situation introduces a new dimension because the banking records reportedly span multiple years and jurisdictions. Legal experts and financial analysts have flagged the initial handling of the data. The first concerning incident occurred on March 11th, hangin Leahai Murilam, when certain banking records were provided to congressional investigators. Regardless of one's political view, the proper handling of sensitive financial information is well defined. It requires appropriate subpoenas, chain of custody documentation, and privacy protections. None of that appears to have been fully followed in this case. The concern is not just about who was targeted, but fundamentally about how the information was obtained and handled. Executive privacy breached through questionable procedural means sets a deeply troubling precedent, and in both markets and governance, bad precedent becomes a cost nobody sees until it's too late. Reports subsequently surfaced that selective portions of these records were leaked to media outlets before formal congressional review was complete. In any system, political or financial, when investigative tools are deployed without following established protocols, we cease measuring leadership and start questioning process integrity. At Mui, Hai Mui Ba A, on April 8th, Hai Ngin Le Hai Mui Lum, major business leaders began issuing statements expressing concern about financial privacy implications. That is not normal market behavior. That is institutional risk assessment happening in real time. Let me clarify what impeachment truly means in this constitutional context. It is a constitutional mechanism that allows Congress to bring charges against federal officials for high crimes and misdemeanors. Think of it as a corporate board's power to investigate executive misconduct. It is not a conviction itself, but a formal investigative process. When $1.5 million in transactions were highlighted in these records, that's not just accounting data. In business investment terms, that is a material amount requiring definitive explanation and transparency. The committee chair's memo stated, and I quote, "These transactions raise significant questions that demand answers. That is not political posturing. That is governance oversight in action." Congressional activity has accelerated dramatically since these records emerged. Cabinet-level officials have been asked to prepare testimony. When Congress moves this quickly from document receipt to formal impeachment consideration, it indicates either extraordinary evidence or extraordinary political calculation. Markets must assess which is more likely. In corporate terms, this situation resembles when a company faces unexpected disclosure of off-balance sheet transactions. This means that financial transparency expectations for public officials may be permanently altered. I've observed this pattern before: institutional stress followed by systematic reform. This developing situation introduces several distinct layers of complexity. First, it involves specific financial transactions. Second, it creates questions about proper investigative procedure. Third, it occurs within an already contentious political environment. And fourth, it raises broader questions about financial transparency requirements for public officials. In markets, we call this multidimensional uncertainty a compound risk. When multiple variables interact in ways that amplify potential outcomes, compound risks require particularly careful management. The banking records reportedly show a pattern of transactions between several corporate entities and offshore accounts over a 6-year period. The $1.5 million flowing through intermediary entities represents the central financial question. In financial analysis, sometimes it's not individual transactions, but their pattern and timing that raises questions. Context matters as much as content. At exactly tham. Bonmur lama. 9/25/4. Yesterday, the House Committee released its preliminary findings in a by-page report. This signifies that our governance structures are actively processing these allegations through established channels. The most significant aspect of this situation isn't the specific allegations, but whether our institutional processes can effectively evaluate them despite political polarization. Oversight effectiveness ultimately depends on producing conclusions with broad legitimacy. The fact that these serious allegations will be examined through formal constitutional processes rather than merely trial by media represents an opportunity for institutional functionality despite obvious stresses. We are not merely observers in this process, we are profound stakeholders in its outcomes. Whether managing investments, operating businesses, or simply participating in our democracy, we all rely on effective, credible oversight. The principle of accountability, regardless of position, forms the foundational integrity of both market and governance structures. When oversight mechanisms lose public confidence, their effectiveness diminishes, regardless of formal authority. I've lived through numerous political controversies and market disruptions. The real story isn't about any specific individual or transaction. It's about whether our institutional framework can still process complex financial allegations in ways that produce broadly credible conclusions. Silence is always a choice, and sometimes it is the most expensive choice of all.